Hello, wonderful. This is Tax Coach Susa, protecting taxpayers. How? By empowering and illuminating you with Tax Takeover training. Today, I'm going to talk about 10 critical tax updates, and I'm also going to talk about the new act that was signed into law back in August 2022. Okay, so these 10 tax updates are for tax filing 2023, but for tax year 2022. So before I continue with the tax updates, I just want to explain something very quickly. Let's pretend that the tax updates are chairs and table. And then let's pretend that the U.S. tax structure is your home. If I give you a table and a chairs, you need to have a home to put it, right? So you can utilize it. Same thing with the tax updates. I'm giving you the tax updates, but it is critical for you as a small business solopreneur, a small business leader, entrepreneur, that you understand, you have a basic, a clear understanding of how the U.S. tax map works, how the U.S. tax structure or system works. And the U.S. tax structure does not change much. Tax updates, they change every year. All right. This is actually one of the reasons why I created the Tax Takeover Camp. It's a 5-day training camp for small business solopreneurs to equip you to implement the right tax and accounting structure. Yeah, the right tax and accounting system. All right. So, and that's going to be in March 19th that we're going to have this tax training camp as warfare against tax confusion. And all right, so let's start with the dates. Those dates are very important. Important dates in 2023. The IRS opened in January 2023 of the year 2023. Look at that. And Forms 1120S and 1065, which is partnership and S corporations, they're going to be due on March 15. And Forms 1120, which is a C corporation, and 1040, which is our personal income tax, it's going to be due this year on April 18, 2023. So tax season ends April 18, 2023. And the earned income credit payout starts after February 15, 2023. So now let's talk about the Inflation Reduction Act of 2022, which it was signed in August 16th, 2022. It's called IRA, which stands for Inflation Reduction Act. It is really an attempt to reduce inflation. They are going to increase, or they're planning to increase, to raise 739 billions by spending or investing, they call it, 433 billions. So that at the end, they can have a deficit reduction of about 300 billions. How are they going to increase or raise revenue of 739? By charging 50% minimum tax on C corporate returns, and C corporate income of over 1 billion in profit as of the very first day of this year, to raise 313 billion. And by reforming the drug pricing or the medicine pricing, to raise 288 billion. And this is what is important here, that's going to be straight for us, is by enforcing tax compliance, to raise 124 billion. And by adjusting how carried interest is taxed, to raise 14 billion. And carried interest is nothing more than the reclassification of interest, how it is taxed, so that they can tax it as regular wages. And let me expand on the enforcing. How are they going to enforce the tax compliance? And this is four major for mayor enforcing tax compliance. So the IRS will be receiving approximately 80 billions through September 30th, 2031 for four things: taxpayer services, tax enforcement activities, operations support, and business system modernization. And that one they need it because their system is really old. So that's good. But for us is the tax enforcement activities. While, let me put it this way, let's pretend there are children in a classroom and the teacher comes. The children that are running around making all these noises and they're jumping on top of the table, they're the ones that are going to get in trouble when the teacher comes to the classroom. The children that know better and that saw the IRS coming, they stop running around, they sit down in their chair quietly. They're not the ones that are going to get in trouble. When the tax enforcement activities, they come your way, I want you to be the kid that is sitting down in your chair quietly. Even if a few seconds ago you were running around, jumping on top of the table and screaming, I want you to be the kid that's sitting down because you know better, because you understand how the tax system works. That's the reason why I created that. One of the reasons why I created that, the Tax Takeover Training Camp. All right, let's start with tax update number 1. For the Form 1040 changes, that question, that digital asset question, like cryptocurrency, reward, awards, or compensation, it's now in the front page. It wasn't a separate schedule, but not too many people were answering it. So now the IRS wants everybody to answer that question. And so that's why they put her right there, right underneath where you put your name and address. They put it for everybody to answer. So make sure you answer that question. Tax update number 2 is no charitable contributions, deductions in the front page anymore. It's taken out. But they did increase for teachers unreimbursed expenses, goes from $50 in 2022 all the way to $600. All right. Tax update number 3, the standard deduction. For married filing jointly, it went up $800. For head of households, it went up $600. And for the single and married filing separate, it went up $400. And this amount, you do not pay taxes. So let's say you made $35,900 as married filing jointly. Now you pay taxes on $10,000 because you taking out that $25,900. So that's the way it works, just as a reminder. And tax update number 4, capital gains and qualified dividends. The 0% tax bracket applies to incomes. For example, if you're married filing jointly and you made less than $83,350 together, I'm talking about W-2, capital gains, qualified dividends, 1099, miscellaneous, everything. If all that income is less for a married filing jointly, less than $83,350, then your tax bracket, if you sold a property and you're below that amount, it's 0%. So if you gain, let's say, if you sold a property and you gain for some reason, I don't know, $30,000, right? And everything else, your W-2, your 1099, with the $30,000 capital gains that you receive is below that $83,350, and that $30,000 capital gains, you pay 0 capital gains taxes. So that's the way it works, you know? And if you made more than $83,350, then the bracket is 15%. And then over $517,201, then it's 20%. All right, so now tax update number 5, earned income tax credit. If you, for example, if you're married filing jointly and you have one child and you made less than $49,622, you can get up to $3,733. If you have 3 children, for example, you can get up to $6,935 if you made less than $59,187. So those are the new amounts for the 2022 for the earned income tax credit. Tax update number 6. child tax credit went back to $2,000. Remember in 2021, you were getting $3,000 for 6 to 18 years old, and then $3,600 if you had a child that was 6 or below. For 2022, it reverted back to 2,000, but you get up to 1,500 refundable. And the other dependent credit is still $500. It is non-refundable, but it lowers your tax liability. In other words, if you owe, let's say, $1,000 in taxes, in federal taxes, and you got $500 other dependent credit, now that $500 is going to reduce your $1,000 and you only pay $500. That applies to single or head of household or married filing separate. If you make more than $2,500, that's when you start to get some of those credits. And you start also getting less credit if you made $200,000 or more. If you're married filing jointly, same thing. If you made at least $2,500, that's when you start getting this credit. And if you made $400,000 or more, that's when you start losing the credit. That's when it starts going down. All right, tax update number 7, federal income tax bracket rates. And it's still the same, 10% all the way to 37%. And the amounts, however, went up about 3.15% all across. It's an average. And remember, these amounts are taxed after the deduction of the standard deduction. So just important to remember that. Let me expand on this a little bit. I did this calculation for the tax rates. Let's take there are 2 tables here for single individuals, tax brackets from 10% to 24%, and for married filing jointly, 10% to 24%. I just took this as an example. So for married filing jointly, if you are in the 12% tax bracket, which is a little more than 30% of our population is actually in the 12% tax bracket. Did you know that? And in 2021, if you made $81,050, you still remain on the 12% tax bracket. But for 2022, it went up 3.8%. And if you make $83,550, then you still at a tax bracket of 12%. I want you to notice something. For the 10% tax bracket, it went up 3.27%. For that 12% tax bracket, the income bracket went up 3.8%. For the 22% tax bracket, it went up 3.13%. And for the 24 tax bracket, it went up 3.11%. So isn't it interesting that over 30% of the population is at the 12% tax bracket, and that is the income bracket that they increased the less, 3.8%. Anyway, the average of that is 3.15%. All right, let's continue on with tax update number 8. The AMT, I just want to explain this very quickly. The alternative minimum tax. If you may, for Mary in this example, if you may in 2022, Mary filing jointly, if you made $118,100, you do not pay the AMT. If you made $1,079,800, that's when you start losing the exemption. You lose a standard deduction, no standard deduction, no medical expenses, no home equity loan interest, no property tax deductions. You start losing it at that amount. Now, let me explain something else, because you're wondering probably, okay, 26%, 28%. Well, see how in 2022, if you made $75,900, you're at 26% tax bracket. If you made $206,100, then you're at a 28% tax bracket. And for married filing jointly, if you made over $118,100, you are then at a 26% tax bracket. And notice this, 206,100 is the same for married filing jointly, which is not, that's what we call marriage penalty. Not right, not good, IRS. Because married filing jointly, there are two people there. And one person and the single one. So yeah, it really should have been more. But this is how it works. I think this way is easy for you to understand how or when the 26% tax bracket applies and the 28% applies. Just another way to see the AMT versus a federal income tax. Let's pretend the IRS throws two nets at your taxes. Whatever they don't get, whatever taxes they don't collect on the first net of federal taxes, they will collect. If it applies, if there's fish in the ocean, they will collect it with the AMT net. It's two nets that are thrown at your income. So it's another way to understand it. All right, so now tax update number 9, 2022 retirement contribution limits. For the Roth and traditional IRA, the simple, the 401k, the SAP, what you save is federal taxes. So on these contributions, you do not pay federal taxes, which is the larger amount, right? For 2022, the Roth and the traditional is 6,000. And if you're above 50, then 7,000. Simple is 14,000. Above 50, 17,000. 401k is 20,500. If you're above 50, 27,000. And for SAP is 61,000 and 61,000, even if you're 50. This, now, let me show you tax update number 10. With tax update number 10, we have HSA. With the HSA, you actually save Social Security, Medicare, and federal taxes. So if your contributions, that's if your contributions are deducted during the year from your paycheck. That's when you save Social Security, Medicare, and federal taxes. If you're, now this is the year 2023, and you decide, oh my God, I'm going to save $5,000 in my HSA for 2022. Don't do it, because you're only then saving federal taxes, not the 3 taxes, only 1, which is good. But don't do it, because if it's $5,000 and you're only going to save federal taxes, you're better off doing a Roth IRA or a traditional IRA, because you can take out your money without no penalty at the age of 59 and a half versus with the HSA at 65. So the HSA is great. It's excellent to use it as a retirement vehicle as long as you will save those 3 taxes. As long as you do it during the year through your paycheck, as a deduction of your paycheck, as a deduction of your wages through the current year. All right, and some reminders really quick for 2022. Meals from restaurants for business purposes are 100% deductible. Let me repeat this. Meals from restaurants. So that's very important to understand. If you would like to get more information about this, you can go to publication 463, page 12. Now, if you work outside the United States, you can exclude up to $112,000 from your income. And there is no deduction, again, 2022, for entertainment expenses. So try to convert it into marketing strategy so you can have 100% deduction. All right, next one. Track your unallowed home office expenses on Form 8829 year to year to never lose tax deductions if you are a person that has a home office in their home. Let me tell you a really quick story. I had a client that had her for years, a realtor. And every year, because there are 2 parts to this, one part you can deduct, and the other part is subject to other types of filters that you may not be able to deduct. So every year she was able to deduct part of it, but every year she wasn't able to deduct the whole thing. Every year for several years, until one year, I was able to deduct the whole thing. And you know what? She saved on that year over $6,600 in taxes. So keeping track of your unallowed home office expenses, it is critical. Do not let the accountant be the only one tracking that. You, as a small business leader, need to track that because that's crucially important. And then for 1099K, 1099 miscellaneous, and 1099 NEC is being issued for amount $600 or more. So keep that in mind that if you get a 1099 miscellaneous, 1099K, remember, if you have a merchant purchases, let's say you had, I don't know, $250,000, you obviously need to report $250,000 in your taxes. So if you have this 1099K for $250,000 and you report $150,000 in your taxes, that's telling the IRS, come and audit me. So just be aware of that. All right. And be aware of tax scams. The IRS never call to demand immediate payment using a specific payment method, such as a prepaid debit card, gift card, or wire transfer. Generally, the IRS will first mail a bill to any taxpayer who owes taxes. And the IRS will never threaten to immediately bring a local police or other law enforcement groups to have the taxpayer arrested for not paying. It's totally insane. And the IRS will never demand the taxes be paid without giving taxpayer the opportunity to question or appeal the amount owed. And they will never call you unexpectedly about a tax refund, and they're never going to call you to tell you that your identity was stolen. Like, if that happens, write the phone number and report it to this 1-800 number, because the IRS actually has a huge department focused on eliminating that. All right. And last, I want to give you the opportunity to attend the TaxTakeover training camp. It's going to be on March 19, 2023. And to get more information, go to susancare.com. And this is critical. While the IRS is really doing all these tax enforcement activities, we need to do our own activities of being prepared. It took me 2 years to build this, because we're talking about a tax law. You know how complex it is, And in order to build a map that is actually practical, it's not for information overload, because we don't want that. We just want just give me the steps so I can be prepared. Just give me the training, and that's what it is the training, so that you can be equipped to control your cash flow, to protect your cash flow, and to multiply your cash flow. And that's going to give you peace flow, big time. This is a training this is really, really important also for your family, because the tax system is always going to be here. And we don't want our children to stumble and to learn the hard way. Whatever we learn, we need to pass it on to our children so that they even make it better, So this 2023 marks the year that the TaxTakeover training camp enables superpreneurs to take jurisdiction of the tax jungle. Yes, this is a different, never seen approach to tax empowerment. So you are invited really to make history, to be part of this blissful, adventurous tax revolution to totally kill and eliminate tax frustration and accounting chaos. So I hope you join me and we can together be prepared for any audits. And most important really is your peace. Everything is organized. The IRS comes, you say, hey, just come, sit down, make yourself comfortable, because you understand the map. You have everything organized. I don't want people to live frustrated, because that is a deterrent to your health. I've seen people getting sick over tax frustration. And that's the other reason why I decided, you know what? I need to do something about this. This is insane. The other reason was my son. I'm thinking, geez, okay, now I understand how this works, but I need to do something because my son is coming. He's 21 right now, and he already started working. So he needs to understand the tax system, and he's going to be ready to start investing. It's like, okay, how do I run my finances so that I don't get to the IRS tax register and then pay all these taxes? I could have known how much tax I was going to pay way before tax season. So now I have this time, 3 months, to decrease it, to eliminate it. So by the time I get to the cash register of the IRS, I feel so good that I was able to save so much in taxes, and I only have to pay these, or I have to pay nothing. That's what I want. That's what I want for my son. That's what I want for all of you. I want you to live long, and I want you to have peace. That's what this is. This is a revolution for us small business owners to get together and really be empowered to understand the tax map, the tax system. Everything is about being practical. Everything is about implementation. How do I put it in practice? And that's what I want for you guys. So thank you so much. Big hug and a kiss. Mwah. I'll see you on the next video. Bye-bye. If you like this video, please subscribe, share with your family and friends. I will embrace your inspiring comments. Until next time, remind your heart to smile and fight for your dreams with honor and undying determination. Thank you so much.